Hi, good afternoon, everybody. So I think this is the last panel between the lunch, so we'll try to be as quick as possible. And one of our panelists also has a flight to catch, so he would also be leaving early. So I think this is a very interesting topic where we talk about the collaboration between NBFCs and fintech. Now, see these NBFCs. If you look at NBFC fintechs, are playing a critical role in India's including in the financial inclusion perspective. And as per the RBI report, which is came out, the NBFC industry's AUM is expected to be around 74,000 crore by 2025. And similarly, the fintechs is expected to contribute somewhere around 2.5 trillion rupees or by the 2025. This is as per the RBI report. Now, traditionally, if you look at, there has been a clear demarcation between the technology companies and the NBFCs. But with the growth of this tech fintechs company that is coming up, this traditional line is blurring up. Now we will hear from this industry experts about how this collaboration between fintech and technology can help in terms of increasing the customer experience, driving the innovations, and help in terms of increasing the financial inclusion in the country. So now I will let the forum open for the panelists. So start with, I will request Sudesh, talk about your company and just tell us something about how this collaboration can help in terms of the increasing the customer experience, because ultimately product anybody can launch. What is the factor for a customer would be the customer experience, how this collaboration between fintech and BFC can enhance or give the seamless customer experience in the entire life cycle of the loan, right from loan onboarding to the loan servicing. So yeah.
Yeah, good afternoon, everyone. I'm Sudesh Putran. I'm the CTO at Credit Access Grameen. We are one of the largest microfinance players in India. With the AUM of almost 26,000 crores. To understand scale, we process almost 1 lakh loans a day and onboard almost 8 to 10,000 customers a day. So for us, technology is a very critical part of our business, because if you have to scale, technology plays a very, very key role in our business. So if you look at fintech is known for providing out-of-box solutions, out-of-box thinking solutions, and they are able to turn around solutions with speed and scale. And if you look at a fintech, they are born out of cloud in most of the places. So they use the latest technologies and a different way of looking at a problem. being the core competency of them, of improving user experience, identifying friction in any process or any product, and finding solutions around it. Whereas the bank or a NBFC like us, basically, we have the great business domain knowledge, compliance needs, but because of the existing resources and vendors, solutions might take time to deliver and implement, and hence adopting fintech solutions in this whole process enables us to get where we need to be at a faster period of time. So fintechs help us to accelerate delivery of IT solutions. And primarily from a UI UX point of view, since it's their core competency, it helps us to identify the friction in the process, helps us eliminate that through various technologies. So in our case, we use fintechs extensively, right from onboarding, be it KYC checks, OCR, penny check to identify whether the customer has got an account or not, the rule engine. We are working with one of the fintechs. So we have got fintechs embedded in the entire journey, so as to make the process more STP, make it more simpler. Because at the end of the day, if at all we have to increase scale, we need to make sure that the process is very seamless, very compact. So fintechs play a key role there. So the way they complement us is basically they have the technology domain, but they lack in compliance. They lack in areas of domain knowledge. So it's a complementary relationship between a bank and fintechs, where the bank or NBFC has good knowledge about the process, good knowledge of compliance requirements, and this type of integration or collaboration is a win-win strategy for both. That's basically what I want to say, and it's really going to help us grow faster, both from the NBSP point of view as well as from a fintech point of view.
So thanks, Sudesh. So I'm not going to let you leave like this. So I'll ask one more question to you. So in an era, I mean, without this fintech, and now you said that you're using multiple fintechs for this thing. How it has helped it for you to remain this competitive? I mean, you said that you are processing 1 lakh loans and you're the largest MFI in the country. And you also mentioned to me during the offline discussion that you are processing around 10,000 loans per day. So can you just tell me, can you imagine the era without fintech? What would have been the situation of your company?
So basically, since fintechs come out with a different type of a lateral thinking to a problem, and that brings the great value on the table. Unlike a typical NBFC who has a set vendors, set users, and typically they look at the problem within themselves. Whereas if at all you look out from outside in, a fintech provides a solution in a different scale and manner. So that's a real value add that they bring. And secondly, the whole industry by itself is becoming very competitive. So to stay competitive and ahead of competition, definitely the in-house teams can provide solutions, but probably we might not get there on time. So fintechs would typically help us get there. And in this growing competitive landscape, I think all of us need to do things faster than before.
No, very true, very true. So I'll ask Aman, can you please, on this same topic, if you can help us understand how it is helping?
Sure. Good afternoon. So I'm Agam. I'm the
Yes.
I'm executive director of India FinCap. So right now we are doing JLG loans, which is a small ticket size loan, mainly in rural areas. We are present in 5 states. We have approximately 60 branches. So fintech partners have played a crucial role in our growth. We started this product 5 years back, and we have not developed in-house technology. We have used fintech partners for various partnerships. So in our company, what we have done for credit assessment, when we started the company, credit assessment used to be manual. We used to fetch bureau reports. One person used to do that. Another person used to check the bureau and accordingly approve or reject the member. But with the help of fintech partners, the credit assessment has become automated. It's like live basis. You just need to fill KYC and you will get the credit report and the approval or rejection of the client on time. So there's no human intervention involved in that. Saying that, it is important to have a on-ground team as well. After the bureau check, we need on-ground team to check the to do the house verification and other things. So it's a collaboration between the fintech and NBFC, which is very important. Secondly, now I feel what I've seen in rural areas, each and every household has at least one smartphone and access to internet. They have access to UPIs. So it is driving the cashless collection. Earlier there used to be a lot of cash collection. Now we're moving forward to cashless collection with the help of UPI, with the help of different API integrations with banks and payment banks.
Okay. So I'll come to you, Yukti. You are fundamentally a fintech, correct?
Yes.
But at the same time, I heard that you are also an NBFC also.
Absolutely.
So I think this question probably panel is based for you only. We have been prepared because you have a combination of both.
Absolutely.
So can you tell me how this collaboration can help in terms of, or is helping you as an NBFC and as a fintech both from that side?
So, hi, good afternoon, everyone. I'm Yukti Khanna and I'm from Credible. So, as rightly said, that we are a fintech and we have an NBFC through which we are funding. And when I talk about, the prime areas of concern that a fintech face would be around, lack of capital, that they need to expand their own business or have new products in the market. Now, NBFC is sitting or has a substantial capital reserves with them which NBFC helps them to provide and expand, through which they can expand their products and think of new innovations. Now, getting on to looking at a second scenario wherein there are limited resources in terms of a fintech would have, and NBFC having a larger infrastructure and also capital, or also customer base, through which a fintech can capitalize and increase their overall base, and also look at more diversified products for a bigger group of people. To cite an example here, we at our platform, what we are actually, probably an example would be that to one of the large corporates that we are catering to, there was an issue in invoicing of the suppliers. It was taking a lot of time for that corporate to, fulfill or go through the entire lengthy process while he was purchasing certain amount of goods from that supplier. Through our platform, we enabled and reduced that time, and also provided a clear timeline, or a timeline between the invoicing and a GRN, through which, one, the process got streamlined, two, the supplier could also approach an NBFC or a bank asking for a loan there, say a invoicing, pre-invoicing, or a post-invoicing loan that they could ask there. And so that's a kind of a collaboration when we talk about a platform or an NBFC together.
Okay, so you're leveraging the benefit of your being a fintech company as a sister concern also. Dominic, just wanted to ask you quickly on the same topic. So you're into affordable housing perspective, and as an affordable housing company, there would a lot of borrowers who will come to you who may not have a as good robust credit history as could be normal middle class kind of thing. How this fintech is helping you in terms of are you using some fintech solutions or collaboration, or you have some in-house solution to do this credit assessments and other things?
Good afternoon, everyone. My name is Dominic. I'm the Chief Technology Officer for an affordable housing company based out of Gurgaon. Okay, sir. With regards to your question, we do have tied up with 2-3 fintechs for working on certain particular areas, especially when it comes to underwriting process, where you talk about the BREs, and there are certain sectors where documentation is always a challenge. So there we use fintechs for underwriting us, because they are more, you can say, they are more exposed to the market than we. Rather than you investing, building a team and building your own product with a limited knowledge, it's always good that we work with the fintech. And presently we work with 2 people for our underwriting process and for identity verification, where that's actually reduced our TAT. The quality of the process has been improved. And second thing, the time taken, the customer experience, the sanction process has been improved. So fintech plays it's like more of an hybrid technology. Rather than you having your own team and doing it, it's good that you have a technology team, because they work as per your requirement, and they have a better you can say that an out of box thinking. These guys, the fintech team, comes with an out of box thinking which helps us out to build better solutions, rather than we building a team and doing a lot of other things. And technology wise, you need to handhold them when it comes to compliance, cybersecurity, and all that. That's our as a NBFC or a HFC, it's our duty to take care of it. But from the product development perspective and the tech stack, they seems to be a good that's helping us to give a better experience to the customers.
So I wanted to ask you another question on the same topic for primarily. So when you look at this fintechs, I mean, they bring us the latest technologies into picture. At the same time, so we are able to have, probably we'll be able to have a better credit decisions because of these fintechs, which as an NBFC we may not have that robust technology solution, or it may require huge amount of time and energy, and that is obviously not our core strength. The fintechs have that as a core strength of this thing. Now, how this collaboration can help in terms of minimizing the risk? See, at the end of it, I am a fintech, correct? Which provide a technology solution, and you as an NBFC have the actually exposing the risk in terms of by giving the loans. How this collaboration can help in terms of minimizing the risk, or any thought process around that? Maybe I'll ask Yukti you, and then we'll go to you.
So minimizing risk would then be because fintechs are exposed to more regulations, which probably an NBFC can help them, meet the kind of regulations or regulatory compliances can be taken care by the NBFC, and in collaboration, the fintech can also benefit out of it. Certainly there are risks related to say the normal cybercrime that we are actually facing these days. Now that comes into account when so as an NBFC or as any lending partner, the core will remain the same, only that we would be more cautious while onboarding any customer, and few checks over and above partnering with a tech company, we would that will remain with an NBFC, and that will be the core of lending always.
Yeah, thank you.
Just to add what Yokita was saying, yes, fintech, you can ask them to build a product for you and a platform for you, but end of the day, risk is carried by the concerned NBFC or a HFC. It's my duty to see that, when I'm lending to a customer using a particular platform, how much of risk I carry with that. That's where I had to look at, especially that's where your FCU team comes into picture. The underwriting is strong. To get your underwriting strong, you use a tech platform. But the fintech cannot take the ownership of the risk. It is solely the HFC and the NBFC takes the risk of carrying the risk on your head, and see that how minimize you can do, trying to put on better things. That's why you have your FCU team, your credit team, then your underwriting. There are multiple teams sitting and doing it. It's basically more of a make a checker concept, you can say. Product developed by a fintech, and end of the day, it is given to your customer. Through that product, we lend the money. So that means I take the ownership of that. I carry the risk with that and go. But we try to minimize the risk wherever it is. More of a make a checker concept comes into picture here.
Agam, I just wanted to ask on a similar thing. So, while you are, I'm sure, a prospective customer to many of the fintech which are showcasing their solutions over here. By doing this collaboration, how do you think you can harness the power of this AI ML that comes to you in terms of the informed credit risk decision for be able to this thing?
Sure. What I feel as an NBFC, our core is lending, not developing a tech. So definitely fintech partners are very key to our success. So I feel like first and foremost, credit assessment has become very easy. As I said, you can do various assessments like credit bank statement analysis, IT analysis, GST analysis. And because of these all analysis, there are many new products coming into play, like P2P, P2P, NBFCs have come into play. We can do early salaries. We can do supply chain finance because of GST analysis, bank analysis. So all these have really helped company grow and diversify into new products.
Yeah. So I think while till now we have been talking more in terms of how fintechs can help in terms of the growth of NBFCs. But I think one of the very important point which we have not touched till now is on the data security. This is a highly regulated industry, and data security becomes extremely, extremely important because we capture the critical personal information of all the borrowers that we have. So, Dominic, I wanted to ask you in terms of question on the cybersecurity side, how this NBFCs can collaborate to enhance the cybersecurity measures to ensure that the data remains secure, and yet we take the best advantage of these fintechs which are coming up into this thing.
So just to add to this, presently the way the financial industry is going, you cannot have 100% data security. Okay, you can, to a level, you can prevent incident happening. You can try capturing, but end of the day, how you're going to store the data, what you're going to do, how you're going to keep the data, how many years, because today you have RBI or very strong on these particular compliance, especially when it comes to data security of this one, DPDP Act coming into picture. So what I feel, the protection of the customer data is your responsibility. As an NBFC, it's my responsibility to take the ownership of it, irrespective of the situation. Because whatever you do try, 80 to 90% you can try to control, but the 10% is always a vacuum which has been created. For example, if I tell you, we are not supposed to use take the photocopy of the Aadhaar card for a salesperson, but there are scenarios where the particular mobile number is not mapped to that particular Aadhaar card. So we cannot generate an eKYC automated, though we have an API integrated there. There you need to take a copy of this. Now, when you take a copy of that, how confirmed is that this has not been shared by many people? Do we stop doing the gallery part? There are certain glitches which has to be
addressed not only by the NBFC or HFCs or any financial institution, even at the ground level. That's a, like, and I say, like, if UIDAI says that 100% of the Indian citizens should have an Aadhaar card, which is a mandatory requirement, and everyone's mobile number should be mapped to it. But you don't find that, 80 to 90% you only find people using it, and many people don't even have it. And it comes to PAN also. You find multiple PANs being issued. So there are certain vacuums which has to be overcome. Then only you can say that, the cyber security is under control, your data is under control, your customer, this one. And when you come out to the HR policies also, for example, if an employee is exiting your organization, what kind of wipe out do you do? We do a typical process, MD and lagao, would say we clear his phone off, we don't carry any data. But after that, what does he do? There are many data which he carries with himself. So how are you going to protect? So that is not 100% thing till the ground level, the vacuum has been cleaned off, and then you come to the, and you know very well, say cyber security or cyber risk is not an 100% foolproof. You always carry a risk with that, and you need to live with that.
Yeah, I think I just wanted to add my bit on to this thing. So you rightly said, Dominic, also, but I think if I want to summarize that particular point, I think one, RBI has recently brought a lot of regulation in terms of data security, especially come after COVID and other thing. We have seen a lot of ransom attacks happening on these companies. So now it's a question of whether it is not a question of whether you will be attacked, it is a question of when you will be attacked. I think that is the question which has become, and security will always be following up the bad elements, all those things. But I think to some extent, what is important is that how strong are your internal processes. I think that is one key thing, is that, and how you are, that is one, and second, how strong is your outsourcing agreement or collaboration agreement with the fintech is there. I mean, are you able to regularly visit their facility to check how the data is being kept, which is secured or not? What compliances are being followed? While there are some while they are being following RBI compliant, but there are some secure compliance like ISO 27001, which are more in terms of data security, other things. I think if fintechs can follow, we can ensure that fintech follow this data security, some of the compliances, coupled with our strong internal processes and regular audit, I think to large extent we will be able to keep our data safe from that particular perspective.
Agree on that, sir.
Yeah, I think with that, I think I'll conclude this discussion. I think it is very clear from the discussion that we have, there is no escape from this collaboration between the fintechs and the NBFCs. That is the future of, if we have to increase the financial inclusion within the Indian ecosystem, if I would look at. So there is no escape from that. But what is essentially required is that I think these two have to work together to improve and increase the financial inclusion in the industry, with a proper collaboration in terms of proper data security and proper tools and techniques and other things. I think gone are the days when we used to think that no. I think in fintechs have come up, what will happen to us? Or we used to say they actually complement each other. See, fintech, by simply having the technology, cannot be the market leader, because in a NBFC kind of, if you have to improve the financial inclusion, microfinance, whatever it is, basically you go to the last village. Fintech cannot go to last village because they would not have the capital, they don't have wherewithal to do that. Whereas NBFC have that power, where they have feet on street, thousands and lakhs of employees who are into field. If we add this fintech power to them, that becomes a formidable force and to help in terms of increasing the financial inclusion in the country. With that, I want to thank all my fellow panelists and to all the guests who have been here waiting patiently and listening to us. We are 1 hour 25 seconds before time. So thank you, everybody.